60 years ago, an up-and-coming folk singer warned us that the times they are a-changin'. It's a song that could have been written for the 2020s when the first global pandemic for a century and a grinding war in Europe have caused us to challenge beliefs and assumptions that we've held for a lifetime. It's helpful to look back through history to put our current situation in context. So let's start with the 5 super cycles that have defined the last 160 years based on insights from Jim Reed at Deutsche Bank. 1860 to 1914 can be seen as the first era of globalization. This was when we first started producing household items at scale and cheaply, while a big increase in the population meant more demand for commodities. We had the First and Second Opium Wars, which is how Britain ended up running Hong Kong. Funny to think that these days politicians try to fight a war on drugs. Back then we were fighting wars for drugs. It was also the time when there was a conquest of sub-Saharan Africa by European countries, and the fallout from that is still being experienced today. That meant all kinds of natural resources like rubber, diamonds and gold became available in Europe and helped drive the economic miracle in North America. This was an era of great growth and expansion, albeit based on what today would be regarded as the most unwoke and unfashionable of methods, colonialism. Then we had the tragic era from 1914 to 1945, which can best be summarized as war and depression. As well as the global conflicts, this era saw the Great Depression, the Wall Street crash, a decline in consumer demand, and various financial panics. And of course, one of the core components of that depression was the gold standard, which effectively linked nearly all the countries of the world in a network of fixed currency exchange rates, which helped export the American downturn to the rest of the world. In America, industrial production declined by 47%, GDP by 30%, and wholesale prices by 33%. As a comparison, in the great financial crisis of 2008, American GDP fell by just over 4%. The post-war era from 1946 to 1971 can be categorized as the Bretton Woods era. After World War II, there was a real sense that people wanted to do something new and create a better world. That directly led to the Bretton Woods system, a whole new global financial system with the dollar replacing gold as the global currency pegged at $35 to an ounce. The World Bank and the International Monetary Fund were created to monitor the new system, and participating countries promised that their currencies would be pegged to the dollar, and if a country's currency became too weak relative to the dollar, their central bank would buy up its currency in foreign exchange markets. Each country contributed to a fixed pool of national currencies and gold to be held by the IMF, against which they could borrow in a time of need. The World Bank, despite its name, did not become the world's central bank. It was set up to lend to the European countries devastated by World War II, and in more recent times it's focused on lending money to economic development projects in emerging market countries. Then we come to the 1970s, a decade I remember only too well as the high inflation era. The Bretton Woods system had worked reasonably well until 1971, when there was a dangerous dip in the value of the dollar caused by too much currency in circulation. That could never happen again, could it? Tricky Dicky Nixon tried to deflate the dollar's value against gold, but the plan backfired, triggering a run on American gold reserves. People were saying, look, if you're going to keep devaluing the dollar, we'd rather be paid in gold, thank you very much. So Nixon interrupted an episode of the cowboy series Bonanza to say that he was temporarily taking the dollar off the gold standard. Of course, it never went back and the age of inflation began. Rising wages, a 70% hike in oil prices during the 1973 crisis, and inflationary measures from the government brought annual inflation above 20% in the UK. Those of you under 60 might like to play that last line again. Today's central bank obsession with 2% inflation targets was birthed in an era that saw prices rising 10 times faster than that. In the first quarter of 1970, the average UK house price was £4,377. In the same quarter of 1973, that figure had risen to £8,395. The decade saw three-day weeks and massive industrial unrest, culminating in the winter of discontent that helped Margaret Thatcher win the 1979 election. We can then bracket the decades from 1980 to 2020 as the second era of globalization, which, according to Jim Reed, has seen the best combined asset price growth of any era in history, with equity and bond returns very strong across the board. It's been the best era in human history in which to be an investor, and the length and breadth of its largesse has programmed 99% of the financial services industry to believe that the next 40 years will mirror the last. The party will go on, the markets will keep giving, and we'll all live happily ever after. I beg to disagree. I'm not Einstein, but when I look at how the performance of the financial markets moves up and down across the eras, it continues to create big winners and big losers. Today, valuations of companies like the Magnificent Seven and the S&P 500 are at all-time highs. They're either going to break out to a level not seen in 160 years, or they're going to start a long, inexorable slide downwards. If you were forced to bet your house on the direction of travel in the next era, which way would you go? All of which brings us to the 2020s. I'm a glass half full kind of a guy, but I'm not betting against the weight of history. I'm calling the next super cycle, the 30 years from here until 2050, the age of uncertainty. While I'm nervous about putting new money into the S&P 500 to chase new record highs, I'm much more relaxed about direct private equity investing, where I can provide share capital to fast-growing companies away from the spotlight of public scrutiny. If you'd like to learn more about private equity investing, join me on the next free preview of my 8-figure masterclass at 8figuremasterclass.com. Don't forget to like and share these videos, and I'll see you next time.